Our next session will shed light on the innovative strategies, technological advancement, and management decisions driving the transformation of traditional private sector banks into agile, digitally forward entities. Dive deep with our experts into the behind-the-scenes effort that are redefining banking operations, customer engagement, and competitive positioning in the rapidly evolving financial landscape. And to have this fireside chat, we would like to invite on stage Sekhar Rao, Executive Director, Karnataka Bank, and Sameer Singh Jaini, Founder and CEO, The Digital Fifth. Ladies and gentlemen, I request you to kindly settle down as we begin our fireside chat.
So, I think my request is if you could all settle down, please. The topic is interesting, right? I think all the while we always thought that old private sector banks were always considered कि इनसे नहीं हो पाएगा. Okay, there was always a thought that they will remain like that. They will be branch oriented. They will be interacting with the customers the same old way. And things have changed, right? I think if you look at a Karnataka Bank or a federal bank, or maybe original change which we saw with RBL changing. So I think this has been a dramatic change in the way people are operating, how private sector banks are now, old private sector banks are changing. So maybe, Sekhar, I wanted to understand from you, कि होता कैसे? How does it happen? What's your vision on this, and why this movement of sudden growth and sudden partnerships we see in the market? So quick view on it before we go into deeper questions.
Thanks, Sameer, for putting together this awesome event. The response has been quite magnificent, and happy to be here. I see a lot of people rushing out for lunch, but still we'll stay focused. Yes, the fundamentals of banking remain true, irrespective of whether it's old gen private sector or new gen private sector. People, process, product, and capital. These, and now you have a fifth vector, that is partnership. So earlier it was just about the four traditional ones of people. So what we are trying to do at old gen private sector banks is to focus on these four, juice out more efficiency from these four, but additionally look at leveraging partnerships. Clearly, you have the incumbent banks who have mastered the traditional four vectors. They do it a lot efficiently. They started off in an era where the branch licensing, etc., was regulated. So they conceived products and structures which was centralized, process at scale, do it at one location, and they mastered this. So you had those corporate salary accounts, you had centralized loan processing hubs, and that became a mantra. And here the old gen private sector banks are playing catch up. But there's another vector where you have, which has emerged over the last couple of years, and that's our partnership. We see a great opportunity for universal banks like us, where we work with partners, where we work with innovative NBFCs to create structures which are different from what has been set in the last 5 to 10 years. So that this can be the paradigm shift and the field on which we can play. Of course, we can't stand up to the big boys on the traditional vectors, but clearly partnership, technology, digital, these are opportunities where we'll stand up and give a fight. Yeah.
So I think as a bank, you started with this initiative way back with Project Vikas or Program Vikas. So maybe you want to talk about the journey of building the culture and where it is right now, and what does it take to build this? What challenges traditional banks face to reach there, and how it is working? I mean, how is it changing every day?
So any approach to transformation is is along three lines. One is what do you call running the bank more efficiently, changing the cultural landscape, and looking for opportunities to grow differently. So in running the bank, we said we had traditional ways of operating the branch, traditional ways of underwriting, traditional way of acquiring customers, and also servicing these customers. So the first thing we did is how do we kind of revisit this. So we also modeled our, the KBL Vikas was about digitizing and automating, creating those centralized loan processing hubs, creating a sales orientation at branches, and doing, adding capacity to the existing network. So it was more of conventional banking, but being done more efficiently. So as an outcome of KBL Vikas, we had 90% of our loan processing happening digitally. Almost all our what do you call customer acquisition was digital. Then this laid the platform for partnerships. We kind of now have 350 plus operating APIs which we expose to the public. We have 5 partnerships that we are live with, 3 on the co-lending side, 1 on the mapping out the entire dairy life cycle, 1 on doorstep gold loans, and more to come. So that's so there is one. So any bank wanting to transform is you have to organize the base layer. That's where we set up the initial rails, and that happened on our first wave of transformation. Also in ensuring that your risk practices, your ops at the back end was robust enough to kind of support this transformation. Moving on to the next leg of how do you leverage this capability that you have created for growth.
Okay. So maybe you can delve a bit deep into how this partnership structure can be built, right? It's not easy because सबको पता है कि हम ठीक करते हैं, right? That's how it is that aham brahmasmi, right? Something like that. So you think that everything that bank itself has to do, my branches, my people, and now suddenly have a culture where you're looking at partnering with tech companies, partnering with fintechs, partnering with embedded finance players. So from a shift perspective, process perspective, compliances, how do you put it all together, right? Because they technically will always avoid anything which goes outside, processed outside. So how is that change getting done?
So first is the entire mindset change, and banks are traditionally used to being playing the big brother in a partnership, and it is always this is how we want it to be, and we will tell you what needs to be done, and you follow it, follow us, basically my way or the highway. So that mindset change of giving the partners a level playing field has to happen. And then building those internal structures, which I earlier spoke about. One is everybody says a tick in the box on a tech capability means you're ready for partnership. But that is just hygiene. Then you have to build your risk capabilities, your ability to kind of, risk includes underwriting, collection, everything, the whole 9 yards. Then also your tick of compliance, then operations. Lot of banks which scaled partnership without having the ops backend had an issue, and they had to scale down. So those are things that you need to, and also this entire commercial arrangement where you are fair to both sides. Usually we see in partnership commercial arrangements being pretty one-sided, and the fintech or the smaller brother jumps in to just get a start, but they quickly lose interest because there's no money to be made for them. So it has to be backed by sound financials also at the end of the day.
I think a lot of times when we look at branches and we talk about partnerships, somewhere along the journey we lose touch with our own digital channels, right? I think they get lost. I've seen in a lot of banks started ignoring their digital channels, saying, "Usko to service mein lagate hain, but let's acquire customers through our partner channels and all of that." So any views on how we can engage directly with our customers, because they're changing, their profiles are changing, they're also learning about digital really hard. I mean, I think they are digital already because of the competition in the market and all. So how do you think that traditional banks or old private sector banks can work on their channels differently and make them the best in class?
Yeah, so it's never, so partnership is not an option to your traditional channel. So these channels also have to keep evolving. So you moved from, say, branch-based channels to ATMs, to web, to mobile, and now you have conversational channels like WhatsApp emerging. And banks have to kind of continuously be ahead of the curve, provide best-in-class services here, and even in the engagement channels like mobile and what do you call web, we are moving to contextual kind of interactions. So banks have to continue to evolve, and there also, like for example, we as a bank, we have invested a fair bit of money on creating a best-in-class data lake on cloud. So the important thing here is to understand our customer, give them products and offer them products and services which are relevant to them, get a 360-degree view of them. So today, thanks to analytics capabilities that the way they have evolved, we can build this fairly efficiently. And we are able to pinpoint whether a customer is a primary bank customer of ours, what is their primary banking score, which are the products that they might be interested in. And so the conversations that happen with these customers are very relevant and to the point. It's not just, I'll throw a stone and kuch lag gaya to lag gaya. So it's very focused. So banks have to evolve and invest in all these things, making their channels that much more efficient and relevant, investing in data and analytics, also moving on to channels that are far more what do you call outcome driven. Say for example, conversation based channels like WhatsApp are clearly focusing on outcomes, and the engagement to outcome ratio on these channels are much higher.
Okay. Also, there's a lot of chat. I think the previous few sessions were also on DPI. How does your bank think about DPIs? I've seen you onboarding the new platforms like one of the first ones to move on any of these new platforms like ONDC. So, any thoughts on how DPI will play a role in banks like yours in improving and engaging with customers?
Actually, there's there's an element of bullishness on the DPI side, there's a dichotomy. In fact, on one side, this entire tax payment stuff, particularly things like CBDT, got opened up to banks like us fairly late. It was very late. And on the other side, you have so much of innovation, etc., happening on the DPI side. But conventional income tax payment was opened up to banks, say 20 years after a public sector bank got it. So their government has to kind of also visualize this entire level playing field on both sides of the coin, not just on the new and sexy stuff, but also on existing areas where banks like us should be given the opportunity to be an agency bank full-fledged. So now moving on to the DPI, yes, we are bullish. We are putting a fair bit of eggs in that basket also. ONDC is one platform where we are among the early movers. We are also there on GEM Sahai. We'll continue to participate. It's still not, there's a lot of talk and conversation happening, but in terms of business, it still has to reach some critical mass. I think so it is on the, it's at a phase of the early days of UPI, the low slope curve. You will need some big boys to come in and create noise there. Nobody can discount, while we are kind of going gaga about UPI, nobody can discount the efforts or the, what do you call, initiatives taken by the likes of Google Pay, etc., to create that entire, to make that space what it is today.
No, this is good. Maybe, I mean, I have more questions, but a couple of questions from the group here. If you have any, because many of you may be thinking of transforming or partnering with Karnataka Bank as well. Yeah.
Yeah. Hi. Yeah.
Hi, good afternoon. My name is George. Mr. Sekhar, are you interested in new co-lending partnerships?
I didn't get what kind of partnership?
Personal loan co-lending.
So we are exploring all kind of partnerships. We would be, so our team is out here. So we have Pankaj who leads the digital piece. So you can of course talk to them. So we are exploring partnership in all kind of product spaces.
Thank you.
Yeah.
Yeah, hi. Thanks, Shekhar and Sameer, for the panel discussion. I'm Nupur. I'm one of the co-founders of a Karnataka-based credit fintech catering to low and middle-income populations. So my question for you, Shekhar, would be, what's your strategy, credit strategy for low and middle-income population, given it's a large part of who we are? And then related to that, do you see credit on UPI as an enabler of small credit for this segment?
Yeah, I'm not sure. I think so. We've interacted in the past.
Briefly.
Yeah. So thanks. That's an interesting question. Yeah. First, I'll answer the second half first on the credit on UPI piece. So credit on UPI is usually small ticket credit to customers who are probably either credit dark or first time credit new to credit. So this helps them build a credit history, and over a period of time, you obviously work on the penetration, increase the ticket size. The classical, what do you call, SHG model, where you gave a 10,000 rupees loan, that grew, prepaid it over a period of time, you built a history, you jacked it up to 20 and 50, and that way you worked on the financial inclusion piece. I think so. This will be somewhere similar, so it's not to a group, it's to an individual. It will help, of course, improve the penetration of credit. It's a no-brainer, and it's in that direction. As regards our approach to people who do not have a credit history, we are working on various models, some basic cash flow based, including kacha pakka bills, all those things, some mapping out of the inventory. We are working with small entities in creating those models. But the issue is we haven't seen too many cycles basis which we can confidently say that this particular model works. Also, we are a large country. A model that works probably in Karnataka, which has different crop seasonalities, may not work in Punjab. So there are various dimensions to this problem and to this issue. Also the urban versus rural. So we're working out on various models. There's another Bangalore-based entity who is building a population scale, what do you call, unsecured credit model. We can exchange notes on that. Maybe you can partner with that and jointly create this effort of building credible scoring models for this segment. And then banks can step in to provide that credit.
Yeah, no, absolutely. So, I mean,
I think we'll hold for that.
Okay.
I think. And it did give you an option to meet him later, right? So let's keep it there. Maybe a time for one last question, please.
Yeah, there were some hands from this side, this gentleman and that lady there. Yeah.
Hi, Aditya.
Hi,
This is
Aditya.
from PICE. We are into B2B payments. Very similar question. Wanted to know your thoughts on credit line on UPI and credit cards for MSMEs or small merchants. How does the bank look at this particular opportunity for a small merchant?
So credit on UPI, of course, I just answered that question. So we are already in advanced stages of partnering with, so we don't want to do it on our own. We'll be doing with a partner. Right now we'll onboard one, and maybe there's room for one more. We look at it as an opportunity to kind of offer not just credit to the conventional, what do you call, so you have this entire incestuous population to whom everybody offers credit. That is, people who have bureau scores, people who have credit history, banking accounts, statements, etc. But there are a set of customers who are credit dark or first time to credit. So this is an option where you can reach out to that population. So credit on UPI is something of interest to us. And I missed your other question. If you could.
Credit cards for small merchants. Corporate
Credit cards for small merchants, I won't say credit cards. So we are building a MSME proposition which is all inclusive. We call it MSME Super App for the lack of any better term. And of course, credit card for small merchants will be a part of that proposition.
Thank you.
Yeah, I think with this, we pause now, or maybe just we'll take one last question, maybe. Just one last question.
Yeah, this gentleman has been wanting to ask.
So, I mean, Karnataka Bank obviously is, more of a regional bank, if I understand correctly. So what's your strategy in terms of, both in terms of asset size, deposit size to become a more pan-India bank? And I see that it's not much of a challenge given the digital footprint that is available for you, right? Including the DPI. And is that something like you replicate something what like an RBL did?
Yes and no. So probably I would urge you to see our campaign today on Times Now, where we've just gone live with a campaign across multiple channels. If Sameer permits it, I would play it here in this forum as well, which says Bharat ka Karnataka Bank. So that's the whole theme. Delhi walo ka Karnataka Bank, Mumbai cha Karnataka Bank. So we're repositioning ourselves from being a regional bank to a national bank. And one of the key elements of going national is to build that infrastructure also nationally. So we're present in almost all economic pockets of the country. We have 14 regions, out of which 6 regions out of. So we have national aspirations, but there's ample room in Karnataka itself. It's a very prosperous state. So we want to grow and participate in the growth of the state as well. But yeah, we have national aspirations as well. And you would see us unveiling a lot of initiatives on the product, network, presence side, and also on the branding side, which has already gone live in that direction.
Okay. Do we have time?
Moving on to the next session. Your session next.
Yeah, we'll close now. I guess we are
Yeah.
Thank you so much, Mr. Sekhar Rao.
Thank you,
It was
Sameer.
a very nice discussion.
Thank you for staying back during lunchtime. Pleasure speaking to you guys. Yeah.
Thank you. Thank you, Sekhar. This is super.
With this, we would like to request Sameer Singh Jaini to have a session with us on Vision 2030, Crafting the Future of Financial Services,